Morning, everyone. Thank you for joining me for this live pop-up trading session. Let's jump right in and discuss the markets and then put on a couple of trades. Looks like we have a mixed market, really interesting. The Russell is shot up at one point over 2%. It's basically up 2% still, as you can see here on this Thinkorswim platform. And the Nasdaq is actually doing the complete opposite, but it did hit 14,000 this morning, and we said it would hit 14,000 sometime last week. We felt like it would do that, and I think this is a buying opportunity for the short term for Nasdaq. I don't think it's going to fall significantly, so this is an opportunity to probably do some type of trade, and we will do a trade in there on this session here. All right, I just want to point out that we have, as you know, two different accounts. We have this Thinkorswim account, which is our bread and butter account, where we do yellow highlighted type of trades, very high probability trades. And this is the account that you should follow if you are someone who works a full-time job and don't want to make a lot of adjustments, or someone who haven't been consistently profitable and you want to learn to do that. You want to follow this account because it's going to be basic bread and butter type of trades. Right? And if you are someone who is wanting to try a lot of different other things, then this is the account you want to try to follow. It's a small account as well, but you can see that it is doing it's doing well. It's up about 30% on the year to this point, and we will do all different type of trades in this. Even though it's a smaller account, you can do a bunch of different trades in here. All right, so this morning I sent out a telegram saying that we did a type of futures short trade, and I wanted to explain that really quickly. We did a micro future in the ES. We sold the ES at the time where it was trading at, and you can see that it's down now about $16 since we did it. But we also bought a call spread in that micro ES. We bought the 42.35 call spread, as you can see here, and I'll show you better on the trade tab here. So if we jump to this trade tab and we go to the micro options, we bought a call to stop the bleeding if this market continues to go up, and we bought it about 100 points up from where it was currently trading. So it's about $2 higher since we bought this call. And what happens is that the micro future is $5 per point. So if it goes up $100, we're going to lose $500 on that trade. Okay, but we will stop losing. It will stop losing once it goes above the 42.35, because this option will represent $5 per point as well. So we are willing to lose $500 in this account for this trade, to betting that within the next 30 days we'll actually make money on this type of pairs or this type of short trade. And if we're wrong, then it's only most we'll lose is about 500, and we won't lose 500 if it touches this. Let's say we take it off at 42.35. This is going to be worth something at that point. As this continues to go up, this option is going to go up in price, so we'll be able to offset the losses. We won't have a $500 loss, but if we do, that's fine, because we're okay with that. We're okay with sacrificing some of the premium that we've sold to be able to get some short delta in this position, thinking that the ES will go down more than it goes up in the next percentage wise than it goes up in the next 30 days. Can be completely wrong, but if I'm completely wrong, this account will still go up. Okay, so it's almost no upside risk type of getting some short delta on this trade. All right, so let me continue, and let's jump over to a trade that I would like to do. I'm going to start off in this bread and butter account, and I want to point out that if you've been following this account, I said I will try to almost at least 95% of the time, 2 standard deviations of the time. We're not going to do anything in this account except on Mondays, Wednesdays, and Fridays, so that you can easily be able to follow this. And if you need to learn how to be consistently profitable, you can do that to this account by following us and learning the process. Okay, so with that said, this is a position that we have on that we're going to take off and we're going to put it into good to cancel. This is a futures contract on Thinkorswim. You can put in good to cancel trades on Thinkorswim. All right, for options on futures. You can only do that for options on stock on the TastyWorks platform at this point. So I'm gonna drop this a little bit, and we're gonna change this to good to cancel over here, and then we're gonna check and see how much we're buying this back for after fees and commissions. That's $33 after fees and commissions. So we're gonna make this a little less because we want a little bit more monies out of that. So that's $28. And if we go over here and we look at this, this is about 70%, and that's trading at $37.50. So if we go back over here and we look at that, that would be buying it back for about 20. So this would be about 75%. So we're going to send this, and that's what we want on this trade. We want to collect about 75% on this trade. All right, so the next thing I wanted to point out is that this Russell is up almost 2%, as you can see. And I want to short the Russell, but I want to do it in a very high probability trade, high probability way. So in this case, we're going to go to the 44 days to expiration with the RTY. And we're going to, and if we can get this to populate, for some reason this is taking a second. Let's give it another second here and see if we can get this to populate. Go back to the 44 days, and there we go. All right, so what we're going to do is sell a call spread. All right, I know this is going to be some upside risk call spread, but I believe this is a high probability trade, so I would consider this a yellow highlighted trade. So I'm going to go over here and I'm going to sell the 7 delta here. I'm going to sell the 505, and then I'm going to go, that's 2505, excuse me, and we're going to buy the 2545. This is a 40-point wide spread. You can do that on these indexes, on the ES, the NQ, or the R2Y. You can do something wider than 20 points. So in this case, we're doing 40 points, and we're going to look to get at least $100 on that. You can see it's offsetting the other positions we have in the RTY, so we're not paying any commission on this. So we're going to send this trade here, and we're going to see if they give us a fill, and we haven't got filled yet. But if we get filled, because we are receiving at least $100, we will hedge this one. So this is why I'm considering this a very high probability trade and a yellow highlighted trade for members who are trying to trade in this bread and butter account. All right, so we're going to drop this down to 220, and we're still getting 106 after fees and commissions, and we're going to see if we can get filled for demonstration purposes. And I'm going to drop this down one more time because we're not filled, and hopefully it'll give it to us at 215, and I'm going to send that, and we just got filled at 215. So we cannot hedge this in the micro futures or this RTY. So we're going to have to go once again to the IWM to hedge this, and we're going to go and look for 44 days, and this is the 44 days here, and we're going to buy on the call side, and this is going to be pretty rich on the call side, but you know that we hedge usually at or around the 30 delta. So I'm going to go to this 29, almost 30 delta here, and we're gonna sell that. So this is the spread. This is gonna be about $35. That is way more than I want to spend for this. I want to spend no more than $30 for it. So I told you it's going to be elevated on this call side. These at a 30 delta level. So if we went down a little bit and see if that will change. We went down to the 23 and see how bad that is. So that's $28. I don't like this. If we don't get filled, I'm gonna go hedge this with the micro futures of the ES. It's not going to be as direct, but it will be a hedge nonetheless. That's pretty decent, about 90% of the time. The ES and the RTY go in the same direction. They just don't go in the same percentage wise. As you can see today, the Russell is up 2%. The ES or the S&P 500 is basically flat. So I'm gonna send this, and we're gonna see if we get filled. If we get filled at the mid, then we'll take it. If we don't, then we're not gonna do this one. All right, so there they're not filling us on that. We're going to wait a second and then we'll come back to that. Okay, we're going to jump over to this TastyWorks platform, and then we're going to also do a yellow highlighted trade in this one if you want to do this. If you want to do this trade, we're gonna do it in the Nasdaq, but unfortunately the Nasdaq has come off this lows. When I was looking at this, it was better, but we're still going to do it because I am a little short-term bullish on Nasdaq. So we're going to go over here and we're going to go to 51 days this time. And what we're going to do is sell a no upside risk iron condor. We're going to sell at the 30 delta, a one strike wide spread. So this is the 30 delta. We're going to sell this 14.40.50 and buy the 14.460. And you can see that if we were just doing this trade, we will receive 325. That's 325 times 20 because the denominator or the multiplier is $20 here, not $100 for this EQ, or not 50 like it is with the ES. The most we can lose if we didn't collect anything on this is $200 because it's 20 times 200. Excuse me, 20 times 10. So it's 10-point wide spread. So 20 times 10 is 200. Okay, 20 times 10 is 200. So that's the most we can lose on that. So what we want to collect is more than 200 to be able to have no upside risk to the call side. Right. So I noticed that I was able to jump on the call for a second today while I was at the dentist's office on my mobile phone, and I noticed that Ernie was taking off one of the no upside risk trades that we did for a profit. So that was pretty cool, and he was articulating or explaining that process very, very well. All right, so we're going to go to in this case, we're going to go to, let's sell. We're going to be a little more aggressive. We're going to sell the 20 because I told you short term we're bullish on this. We're going to go to the 25 delta, the 15 delta, and we're going to sell that, and then we're going to go 80 points lower on this, on the NQ and the RTY and the ES, as I mentioned, because it's options on futures and index. You can go as wide as 100 points. In this case, we're going to look at 80 points. So that would be the 12,480. If I can, that would be the 580. No, not the 580. So 80 points would be the 520, and there we go. So the 12,520s. This is 80 points. You can see that if we did this, we would receive at least 255, and so the most we can lose on the puts on the call side is 200. So we will make at least, before fees and commissions, at least 255. So we're going to look at this after fees and commissions. That's 241. So if we can get filled at this, we will receive at least 241. We would take this off around 50-60%, and we should make more than that $41. So anyway, I'm going to send this, and if we need to adjust this because we can't get filled, then we will. So I'm going to go to this working right here, and it's already dropped on us. So we're going to cancel this really quickly, and then we're going to just adjust the strikes a little bit because I really want to get filled, but I want to receive a decent amount. So we cancel this trade. We're going to go back and hit a similar trade. And then now what we're going to do is we're going to make this put side. We're going to make this put side a little, maybe make sure we're at the 15. We're at the 15. That's an 80-point wide spread. We're going to make it a 100-point wide spread. Right? So now we're getting $300 there, and then we got some room to adjust. So we're going to send that. We're getting 286 if we get filled. And what I'm going to do is drop this down to 475, and hopefully it'll get filled right away. So that's what we're going to do, and we're getting 281 after fees and commissions. We're getting more than 12% on our buying power, and we're not getting filled on anything this morning, huh? All right, so that is, let's go back over here to this working. That's 275. They're going to make us go to 414 before we get, 1450 before we get filled. And so that's what we're going to do. We'll still get at least $76. We're going to let that sit. Man, that's a bummer. All right, so this is not getting filled as well. Let's see what happens if we put this at 29, what the price will be. It'll be basically $30. It'll be semantics. That's sitting at to see if we can get filled, and we got filled on that. So we got the hedge on this RTY. It's not the greatest hedge because it's not at the 30 delta, but a hedge nonetheless. And so we're good on that. And so in this account, we are up just a little bit right now today at $50, $59, $60. It's fluctuating. We're going to go back over here to this NQ. And while we sit there, I'm going to give us a stock trade. The Nasdaq is dropping, so maybe we'll get filled. I was looking at this Square, and Square is down $10 a day. Square has been going up quite a bit. If we go back over to this Thinkorswim chart, I'm just going to show Square really quickly here. And I know it's a member that's been trading Square, and Square has just been going up so much recently. As you can see here, this Square has been big time, right? So I was looking to actually play a short-term bullish trade on it, believe it or not, with the earnings come out on May the 6th, as you can see here. So we'll do a short-term 16-day trade. So this is not a bread and butter trade. This is more speculative because it's short-term. It's under 30 days to expiration. This is something that this is not a bread and butter, not a yellow highlighter trade. I wouldn't recommend this trade for everyone. But we're going to do this. We're going to do a 5-point widespread. We're going to do 2 contracts. It's going to cost us about $8.86 in buying power. That's not cost, but that's how much it's going to be put to the side in escrow. We're going to hit review. If we can get filled at this mid, we'll get 109. That's going to be 109 divided by 890. That's going to be 12.2%. So it meets our criteria. And if we get filled, we will hedge this. So we're going to let that sit there. And if we get filled, we will hedge that in the QQQ. But to this point, nothing is getting filled. Let's look at that Nasdaq here. We're at the 450. They still haven't filled this. So I'm gonna force it again, everyone, because I want to get filled on this. I'm going to send this to 1425. We'll still get $71, even if it blasts all the way through the upside. And all right. So now we got filled. And I'm not going to hedge this one because it's already a built-in hedge. Sometimes I do hedge iron condors, but I'm not going to hedge this at this point because the premise is that I believe I'm bullish on Nasdaq for the short term. I think that's going to be a pretty good trade. All right, so we got filled and we got robbed a little bit, but that's fine for demonstration purposes. We wanted to do that. This is really interesting how Marathon and Riot has fallen apart. I mean, this is like almost buy the rumor, sell the news that Coinbase is going public today, and that Riot has just dropped significantly. But we have a put spread on there. We got time decay, so we're doing okay in that one still. In this Marathon here, you know that we hedged Riot with that, and this now it's fully in the money, both of that hedge. All right, so we got filled on the Square one. So perfect. So now what we're going to do, everyone, we're going to go into the QQQ and we're going to hedge that, right? So what we're going to do is go here and we're going to go QQQ and we're going to go to, I believe that Square was 16 days. I'm just going to double check. And whenever you're not 100% certain, you should double check. So I'm going to double check. It's 16 days, like I thought. We're going to go to here and we're just going to hedge for 16 days in the RT and the QQQ. And we're going to go over here and you can see that the QQQ is down today, the Nasdaq 100, and Square is down a pretty decent amount. So we're going to go to at the 30 delta or near the 30 delta, and we're going to buy this hedge here in the QQQ, and it's going to cost us about $22. We received about 109 after fees and commissions. So this is perfect, and keep in mind that this is not something that we're not paying for this hedge, so it will hedge us about $100. The most we can lose on the before this hedge is $890, I think it was, on the Square, because that was the buying power that was holding. So now the most we can lose if that occurred is $790. So that's a big difference. It's over 11% that we're hedging out of our max risk. We know we're not going to have a max loss, but it's just giving you the numbers why we're doing this hedge. I'm going to send this, and we're probably not going to get filled right away because that's just the nature of this game. But we will get filled by sacrificing a couple of dollars. We'll take it to 23, see if we can get filled. No love still, and I want to get filled, so I'm going to, even though the Nasdaq is going up, I would probably get filled here soon if it keeps going up, but I'm going to get filled on for demonstration purposes for this account, and I'm going to send it, and that should work. All right, so now we got the hedge on for that position. We'll take off the hedge once we take off our position, that Square position. I know it's a hedge based on square because I'm combining the days to expiration. So 16 days. I told you that's a little bit more speculative, but I like the trade. We'll roll with that one on that trade there. We collected 109 on 2 contracts, 5 points wide. It's like doing a 10-point wide spread, but we couldn't get as much doing a 10-point wide spread, so we did a 5-point wide spread, 2 contracts. But the risk, though, the risk is basically the same. It's actually less because we're collecting more for the for the 5-point wide spread. All right, so let's see what else we got going on. Do we have anything else working? That square got me. Didn't notice that. It only gave me 1 contract. That's brilliant. That's great. All right, so we're gonna give it a second and see if they give us the other contract here in a second. I should have noticed that. That was a rookie mistake. And so I wouldn't have put on my hedge at that point, so because now we only collected $57 and our hedge was, let's just say $27. So
when where is that option, all or none, when you put the order?
I could have put that, but I don't even know if they have that option on TastyWorks, all or none. Let me check. So let me hit replace, and let me go over here. So they don't even have that option of all or none.
Interesting.
Okay. All right. So, but that I think Thinkorswim has that option, or they used to. Maybe they took it away. Not too many people use that as much as they used to do in the past. But we're gonna give that a second. It's Square is still going down, so maybe we will get filled because we're going against the grain. So there we go. Perfect. We got what we wanted. All right. So if you follow that trade, you want to make sure you get filled on the puts. Don't do what I did. Make sure you get filled on the put spread first. All right. So there we go. Let me just make sure I'm covering everything I wanted to discuss this morning. All right, so we're trying to get, we put a good to cancel for this order to get filled at a little more than 75%. Once we can hit that, you can see that this NQ is doing okay, even though we're down today. It's only $5. We're up $35 since we did this one. This RTY is doing well. We got filled on that call spread we did, and then we hedged that, and we hedged it in the IWM. So you can see we got a lot of hedges going on in this IWM, which is good. And then we got this QQQ that is going to give us some more buying power back, about $600. Unfortunately, I can't get out of this one until the next 2 days because it's weird, and I don't want to discuss it at this point because it's gonna make this call a little longer and a little bit more confusing to some people. But with that said, any questions before we conclude this morning with this pop-up live trading session? All right, so if we don't, yes.
Can you show me your RTY positions? Remember, I rolled away the one side of it, the put side. So I just wondering how does it
Okay, so yes, I wanted to this morning as well because the Russell jumped up significantly. I took off the call side with 2 days to go. I didn't send that over today, I don't think. So I apologize if I didn't send that over. I was running out to the dentist and I probably forgot to send that over. But if you're in this position, Steve, you can still get out of it probably better than I did with 2 days to go. What I did was take off. Let me just go to field orders here. You can see this morning I took this off, this call side here, 3 contracts that we had on. I left the put side, but now that you mentioned that, it doesn't make sense to leave this put side. So let me show you guys. It's $7 left in the short leg in this. You're looking at the leg or the position just above this red line I'm drawing. It's $7 left there. And then the long leg of it is this right here, and it's in that long leg, it's about, they're saying about $7 or excuse me, $13. So it's not a lot left in this trade, and it's actually off. Something's off with that. So, but regardless, we shouldn't hold this because it's not a 3 delta, and it's going to be some commission or some fees to close, but you can see it's going to give us so much more buying power back, right? So we might as well close this because it's not using capital efficiently for that $21. So what I mean, everyone, is that the buying power right now is holding 695 for us, right? So if we take this 21 divided by 695, that's going to be 3%. So we can easily use that money in another area and get 12 or more % on our capital. So it's time to ring the register on this. I'm not going to force it though. I'm going to send that, and we'll see when they fill me, and then we'll go from there. I also got this position on that's real far down there, the 1975. I can take this off for a small increase in credit too, but I'm not going to force it. I'm going to lock it in at this 5. If they take it, then great. If they don't, then that's fine as well. It'll be an $8 difference. Really don't want to give up $8 for this since it's so far away, but you want to be mechanical about the process, because if this falls out of bid, you'll wish you at least took it off. All right, so we got the Nasdaq dropping again. It dropped 30 points really quickly. We got the ES off its highs. We got the Russell dropping a little bit, right? So I like it. This account is doing great. We're up over 30%, and this account here for the bread and butter, this is up over 20%. It could be up over 30% here soon if we can just get a few of these positions to go well, and I believe it will. So with that said, any other questions before we conclude this live pop-up trading session?